duty truck maker may close its Tokyo factory for 4 days next month. The Nikkei newspaper says it's going to operate for 17 days in January, and that will lower production by 1,000 vehicles, or about 20% of output. All Nippon Airways is trading 1.7% lower. The Nikkei newspaper says Japan's second biggest airline may cut its 4-year capital spending plan by $2.2 billion. And Nikkei News says Mitsubishi Trust and Banking is the top bidder for Nikko Citigroup's operations here in Japan. It says Sumitomo Trust and Mizuho Trust are also bidding for the unit, and all three are offering more than $200 million. Now, Mitsubishi Trust is not traded, but Mitsubishi UFJ down 2%. Mizuho Trust and Banking down 0.9%. Sumitomo Trust and Banking sliding by 4.6%. Bernie, over to you.
Okay, Mike, good stuff there on the markets. And, of course, everything is falling in tandem, so don't isolate Tokyo and do any blame throwing there. Obviously, we have a problem on our hands when it comes to what is going on in America with a deepening recession, the 580,000 first-time jobless claims export to the 7-month low, and, of course, those jobless claims coming in at more than quarter-century high, 26 year high to be exact. Here in Asia, to compound the problems, not only do we have those issues in our own form, but terror, Mumbai attacks, no resolution there, and of course mass protests in the case of a lot of people who aren't really happy with their plight. Thierry Apoteker runs an economic and financial analysis firm that bears his name and joins us on this segment of the show. Thierry, bonjour, welcome to the program.
Hi, good morning.
Good morning, sir. First thing I'd like to ask you, is Asia in worse shape or in better shape? I just kind of compounded the issues at play here with the terror aspect and other elements of unrest.
Well, I think Asia is still in a kind of sound shape, but I would not, put all Asian countries in the same basket in the sense that, as you're saying, some countries are affected by political issues, some other are not, some have been very battered by the decline in exports, or have been less battered. So I would not put all emerging markets, and certainly not all Asian emerging markets, in the same basket.
There's no appetite for anything, though, it would seem. I mean, I don't know how carefully you follow the credit markets, but people were actually accepting absolutely zero return in exchange for having a place to park their cash in short-term treasury bills. Certainly, that tells us that stocks, forget it. Any other asset class, forget it. Capital preservation is rule number one in these very, very uncertain times.
Yeah, well, indeed, as you're just saying very rightly, I mean, we are in a mood of panic, so investors are looking at the ultra-safe assets. But I believe that if you take a slightly longer-term view, that is, if you're looking where will we be at the end of next year, I think it would be safe to start looking at what are the emerging markets that really offer the prospect of a rebound, or at least some sort of positive movement at the end of the year, at the end of next year.
Where's the money going to come from, though? I mean, we're seeing capital destruction. I mean, and falling volumes in various equity markets. If you don't have the cash to prop up the prices, despite breakup values or price to book in sometimes fractions, not even at breakup value, where are you going to get that liquidity from?
Well, indeed, if we are still in that kind of liquidity and credit crunch situation that we're seeing now, I mean, there's no way the markets can go anywhere but down. There's no doubt about that. But the question is more, is the liquidity and credit crunch here to stay for a very long time? And this I doubt it very much, because at one point in time, the liquidity tension in the wholesale liquidity markets will start to subside. And then after that, the credit crunch will certainly continue in one sense, but not with the severity that we've seen since October this year.
Let me harken back to you remember sitting down with people in Singapore in the Business Times and doing something called the Raffles Conversation at the beginning of October. Do you recall that?
Yeah, sure.
Okay, I'm going to pull a few quotes, and you correct me if I'm wrong. I mean, media people are known for getting quotes wrong all the time. One thing on which economists have been proven wrong again and again is the flexibility and the reactivity of the U.S. economy. The United States will still record higher growth than either Europe or Japan. What does it mean? It means the U.S. economy is more dynamic, stronger structurally, and the return on capital is still higher in the U.S. than in Europe or Japan. Do you stand by that? I think that events which have come to pass in recent times have disproven that, no?
No, I certainly stand by that in the sense that whatever you look at, whether the demographics, the technological inputs, whatever, there's no doubt that the potential growth in the US still remains much higher than in the Eurozone or in Japan. There's no doubt about that. The question is the adjustment period in which we are today, and the question is how long that adjustment period. But let me say, even during this adjustment period, and that may be a surprise for many, the Eurozone and Japan will perform worse than the US.
How do you reckon? Do the numbers prove that already, or is there something that has not been flailed onto the markets, which is looming?
No, but even if you look at the performances of the two economies or the three economies since the summer, you see that the cycle has slowed more markedly in the Eurozone than in the US, for instance, and the degree of recession that we'll have in Japan will be stronger probably than in the US. Again, in the very short run, you have these liquidity tensions that makes it very, very difficult to read what's the next step. But very clearly, if you look at fundamentals, there's no doubt that the US has this very specific characteristics, both on structural factors, but also on the dynamics and reactivity of the economy. And we are very convinced that indeed the US will recover faster than the rest. It doesn't mean that it will be very fast, and we're certainly looking for a very soft and very mild type of recovery in the US, but still, it will remain above the growth rate that we'll see in the Eurozone and Japan.
Thierry, last minute here. Your prescription, you prescribe exposure to companies that have pricing power. Who has pricing power in this day and age? I'm just curious.
Well, today the pricing power has almost vanished for everybody because of the collapse in demand. Again, I want to stress one thing that we tend to overlook, is that the type of events that we're seeing since the credit crunch in October is unprecedented in its sense that it's a real collapse in demand. We see that both for consumer capital spending, exports, what have you, it's really collapsed. Now the question is, we don't believe that this can be sustained. A collapse has to stop at one point, and we believe that this will stop probably somewhere between the first and second quarter next year. So this is when the question about pricing power will come back to the fore. At this stage, when you have a kind of stabilization of the situation, who is able to impose a kind of brand and a price? And I think that's the critical question.
Thierry, thank you very much for sharing your thoughts. You have a great weekend.